All right, let's dive into today's market action, shall we? Some interesting things happening on the Singapore Exchange today.
Definitely some movers and shakers worth a closer look.
So I'm Ivan, ready to break down these market mysteries with our resident expert, Irene.
Glad to be back. We've got a trio of Singapore-listed companies on the docket today. SATs, Hotel Properties Limited, and Manulife US REITs. Each one's got its own story to tell, and we're going to get into the nitty-gritty.
Sounds like a plan. Starting with SATs,
Mm,
ticker symbol SATs for those following along.
right. And they just snagged a pretty impressive deal, 14 new cargo and ground handling contracts from Air India.
Plus, they renewed 11 existing ones.
Yeah. And here's the kicker. This news came out after Thursday's trading.
So the market hasn't even had a chance to digest it yet.
Exactly. These contracts cover major airports globally. We're talking about SS and their subsidiary, Worldwide Flight Services, really flexing their muscle.
It kind of makes you wonder, doesn't it?
How about?
Well, could this be a sign of a turnaround for the travel and logistics industries?
It's a data point worth noting, for sure. I mean, if SATs can turn these contracts into solid revenue and profit, it could be a good indicator.
Of course, there's always a bigger picture. Global economic conditions and competition within the sector still play a major role.
Agreed. One good piece of news doesn't mean everything's suddenly rosy.
Right. Always got to keep that in mind. Now, how about we move on to Hotel Properties Limited, or HPL as most people know it.
All right. And we're talking about Ong Beng Seng here, property tycoon extraordinaire.
Who also happens to be the founder and managing director of HPL.
And he just upped his stake in the company.
Snagged 150,000 shares at $3.58 each.
Pushing his total ownership to above 60%, that's serious commitment.
Especially interesting considering HPL's stock price took a dip just before this move.
Insider trading, you say?
No, not at all. Insider buying is the term.
Right, of course.
When someone with inside knowledge, like an executive or board member, buys their own company's stock, it's usually seen as a sign of confidence.
Yeah.
Like they know something we don't.
Yeah, like they're expecting the stock to go up.
Makes you think. Does Ong know something the rest of the market is missing?
Could be, but it's not a sure thing. Sometimes insider buying is driven by other things, like personal finances or even tax strategies.
Fair enough. But it definitely adds another layer to the story, wouldn't you say?
Oh, absolutely. Keeps things interesting. Speaking of interesting, let's talk about Manulife US REIT.
Ah, yes. This one's not as upbeat, unfortunately. Their portfolio value took a pretty big hit.
Down 9.3%, which puts it at $1.1 billion US dollars.
And not a small number by any means. And the culprit.
Seems like a combo of higher discount rates and cap rates.
Cap rates, could you explain those for our listeners who might not be familiar?
Sure. Cap rates or capitalization rates basically tell you how much return you can expect from a real estate investment. It's based on the income the property is expected to generate. The higher the cap rate, the lower the property value, generally speaking.
So in this case, as cap rates rise in the U.S. market, the value of Manulife's properties takes a hit.
Exactly. And then you've got weak occupancy rates in the U.S. office market. That also weighs on property values.
Not really a surprise considering the whole work-from-home shift and the overall economic uncertainty.
Yeah, the office market is still figuring things out, for sure. And to add to that, the REIT manager is predicting a loss for the fiscal year 2024.
Oof. Largely due to those valuation changes we talked about. It makes you wonder, is this just Manulife, or is it a sign of a larger issue with U.S. commercial real estate?
It's the million-dollar question, isn't it? Is it a specific challenge they're facing, maybe because of their portfolio or management, or is it a broader trend we need to watch out for?
More research needed, I'd say.
Definitely. All right, so let's recap, shall we?
Sounds good. We've got SATs looking potentially positive with those new contracts.
Yep, but remember, it's just one piece of the puzzle.
Then we have HPL, where the founder is putting his money where his mouth is, so to speak.
Always an intriguing sign, though not a guaranteed win.
And finally, Manulife US REIT, facing some headwinds, leaving us with some questions about the state of the U.S. commercial real estate market.
All in all, a pretty eventful day on the Singapore market. It reminds us that things are constantly changing.
That's for sure. So for all our listeners out there, before you make any big investment decisions, do your homework. Don't jump on any bandwagons without a thorough understanding of what's driving the market.
Absolutely. Today's market moves are just a glimpse into a much larger story. Deeper research is always crucial. Speaking of research, maybe our listeners can ponder this. How might the global economy and those changing work patterns impact these companies and their industries in the long run? Just something to think about as you continue your investing journey.
Great food for thought. Until next time, happy investing, everyone.